Get off me, boy. Up. You doing the Zoom call? What's good? All right. Got some bigger time frame jump going on, but I think off of the smaller time frame here, just using the simple 15-minute chart, we got a Fibonacci from top and the bottom here, which shows a pretty nice 50% line that been touched once, twice. And then we have the consolidation here under that level. So I think this is the levels that we're going to use as the box idea, which will serve us into today. Am I sick? Oh, hell yeah. I've been sick for like a week, all last week, and then I'm getting better now though. It's just a little bit of leftover, you know what I'm saying? Yeah, bro. Discipline. Duck this. Dollar Tree version? Hell yeah. Mm. Yeah, it's been pretty annoying. Everywhere I go, everyone's like coughing up a fucking storm. Oh wow, the breakout looked crazy. I just drew this line. Can we follow it out the box? I'd try the buys under this line here. Nice entry. Nice push. We don't know if it holds that kind of push. Pretty quick, but no follow through just yet. I wonder on the 4 hour chart, it's looking pretty good for these highs. So technically the target could be the order block here. We're up a band right now off of that entry. Pretty good. Let's target the order block. This is safe. Take profit here because we're above these highs. So that's safe. Take profit for sure. But if we can end up in the order block here, that'd be fantastic. I think we'll take one off the table here. Keep one on just in case it wants to pull back for running more. And all in all, I think I'll just get out completely here at the high of this wick if it can't continue running. So reason being is because we'd end up using this right here as the box, like a smaller box. So if it comes back into it, then we can probably dig under, which means we should see something like this. Right, so we see it push out the top, touch out the bottom, pushes out the top. So if it comes back in, then technically it should push out the bottom pretty deep. And from there, we can probably find a better entry into targeting the area up here. And then the 4 hour has like 30 minutes before it closes. So it would make more sense to get up there, touch it, and then push down and then close. But ultimately, this is the highs that the 4 hours needed to break, which it's doing at the moment. So if we can get a candle to close up here on the 4 hour, that'd be really bullish for the overall market here. We'll talk about higher time frame stuff in a second, but based off of this 4 hour candle alone and just it closing in 25 minutes, that's about as high as time frame that we're going to get at the moment. Yeah, pretty quick band on that trade for like 2 contracts. Went up to a total of 1,500 at the highest point for the sake take profit. Plug in my phone real quick, man. Phone dying. All right. The 4 hours extending. It's trying to get that high. But if it can't, if it can't go up, then it must come down. We need that 5 minutes to try to stay above this and run into that order block up here on the 4 hour chart. And then we should be able to get out for an extra band on one contract. And that'll finish off our day at 2K in profit if we can see that happen. Worst case scenario, comes back down, takes us out the stop loss, and that'll just be a total of a band. So it's also not terrible. So if it can't go up, then it's got to come back down. If it goes back into this box down here, then technically we should see it go out and under it. But I don't think we get that until we get the order block technically. So Yay. So we're pushing into that order blocks territory, and it's finally up the extra band we were looking for. So from here, we definitely can reach the center or even the top pretty aggressively for the order block. So that's a little bit of change that could technically be on the table. I'm down with raising the stop loss higher. Let's say mid candle here, like 18,336. 18,336 here. So that way we at least lock in that extra band if it wants to come back down, or we'd still be in the race for it to continue to push higher if it wants to very aggressively. So not a bad trade. Well, more than likely, okay, yeah, we got stopped out. We got 2 minutes left on the 15-minute candle. So I was gonna say we're more than likely gonna get stopped out because it was the end of this candle closure, which means the next one technically could be the thing to actually run, but not a big deal. Definitely really decent trade, especially to start off the week. It was very easy to see it based off of the market open there. It gave us a hint basically of trying to take off and then coming back down. So we were able to draw that structure line and take the entry and just kind of let it ride towards the higher time frame, which was that 4 hour, right? So the 4 hour order block was here. There was no other reason to send us down prior to getting there. So just a really, really simple trade. Again, I was going to say as well earlier, we had a pretty decent box idea. I'm just gonna slap something on the chart right now just to line this up really quick. Sure. Well, let's just say this is the box idea that we had. So on a higher time frame, you can see the push from under here, right? Top came back to the bottom here, ran to that middle area, still held the bottom, and then ran all the way back up to the top. You could even see the gap that pushed back relatively to the middle, back out the high, right? Back to this middle point. So based off of this here, we saw the candles kind of inching upwards. So within this 4 hour candle here that happened at 6 a.m., you can see the run that was potentially taking place that would just need to get back to the top of this box. And then there's also the order block that we were targeting right here that also corresponds with the top of the box. So from here, we can definitely expect it to do one of two things, right? Could continue breaking and try to run above those highs, or we could actually reject this area and then go all the way to the bottom of the box, which would then cause a bigger drop, bigger arch, right? Uh, so that would more than likely land us below this area. So that's something to watch moving forward into the day. If we do reject this area, then we're looking for a pretty steep sell-off outside of this box. And then after acquiring one of these levels, we'll be able to see some kind of entry we can get for that arch that could come back into the box. Using the box, we can take the Fibonacci levels from the top and bottom, just like this. And you'll see the -50 and the -100. So if we do fall out of the top here and start heading back to these lower levels, that arch should land somewhere from the 50 or the -100%. More likely the -100% because of this low over here. So simply put, higher time frame, right? If we can keep following that moving forward into the week, we'll have a lot more direction to look for. So right now, we can only follow what is given. And at the moment, we are breaking the top of that box. All right, so we were able to catch a pretty nice trade for around 2 bands and some change of profit. Just with that ideology alone, running to the top of the box and then taking profit because we have no idea what we'll do from here. So with more context, we'll be in a better position to answer that question if we're going to keep running for the rest of the week, or kind of consolidate and see if we make a move based off of any news that we might have this week. So for now, I personally am going to leave the market alone. That was a pretty good trade. And then we might be able to see what's good when we have more context in the afternoon. Maybe take some options trade or another futures trade. But not too bad. You guys got any questions or anything? If not, then we'll end the Zoom call there and I'll take this video and add it. Pretty quick move, nonetheless. I appreciate y'all tuning in as always. But for now, let's just set some alerts to the top, bottom, and middle of this box. And then from there, we'll just target something moving forward into the week. So, big news on Thursday. Say less. Well, we got federal meeting or something. I haven't looked at the calendar. Oh yeah, Thursday we got Fed meeting, press conference at 2 a.m. Yeah, so Thursday is definitely going to be the driver. So that makes sense. We'll probably end up holding this box then, and then by Thursday we'll see the move actually break one of the engineered liquidity levels. So we'll talk more about that as we get closer to it because right now there's just not enough context to give. So we'll probably see engineered liquidity moving forward into the week. So be very careful and mindful of trying to take breakouts more than anything. Can you go over box strategy as if you're explaining it to someone for the first time? Yes. Yeah, I can. I can. Okay, let's do it like this. Can you give me 1 second? Let me see if I can grab my mouse real quick. Make this a little easier for me. I am back. All right. I'm gonna go a little in depth on this box idea. I think to understand the box, we definitely need to understand Fibonacci a little more. So I'm gonna explain the Fibonacci first, and then I'll explain the box, and then I'll try to use both of those ideologies and make them very simple. So this is the complicated explanation of it. So the Fibonacci is a sequence of numbers that create symmetry, right? So in symmetry, based off of our Fibonacci definition, we have these squares, right? So I'm going to use these squares as an example for us, and then we'll add more context to it. So we have this first square and then the second square here. So these are going to represent the numerical number 1, right? So we have 1 and 1. So the Fibonacci sequence, according to the spiral, says that the number that comes first and the number that comes after will be added together to create the next one. So 1 and 1 will equal 2. 2 and 1 will equal 3. Right? So it'll just make a bigger space of area. And then 3 and 2 will equal 5. And that would make another big space of an area. And then 5 and 3 will equal 8, which would make another big space. So using the Fibonacci spiral idea, this is how that spiral would kind of make itself. So it would like start from the 1, and then it'll hit this, then it'll hit this, and then this, right? And then based off of those numbers, it'll use all these walls and then just continue to keep growing indefinitely, right? That's how the Fibonacci spiral works. So using Fibonacci and that symmetry, there's a lot of numbers involved in it, but you'll see the box, right? So how does this correlate to trading, right? So on the technical side of things, we have the Fibonacci retracement. This is where we get our box idea. So the box, simply put, if we take off a lot of these levels here, the only thing you should really focus on when it comes down to the box is just the 0 and the 1. So usually you'll get a move that looks like this. Find that brush. So you'll get a run that goes like this, and that will be your 0 and your 1. So based off of your 0 and 1, you'll usually see what's called a retracement, which goes to the 50, and then from the 50, consolidation, and then if it can hold it, it'll go up. If it can't hold it, it'll go down, right? And then usually it'll hit this level, make some more consolidation, hit another level down here, and then same thing, right? So if we were to put the box on the screen, it would look like this. And then if we put the middle line, this would be the 50 for us. So if we take the Fibonacci and add the 50, and then we add the what's called Fibonacci extension levels, right? So we'll take -50, -1, and then we'll take the 1.5, and then the 2. So now you'll have the box itself, and then 2 levels outside of the bottom and 2 levels outside of the top. These are our reference points for the price's movements, right? So this is how you would catch the Fibonacci, right? So that'll look like this. So it runs up to the top, goes back to the middle. If it can hold the middle, then it'll run up again, touch that 0. If it can hold the 0, it'll go back up to the 150. If it can't hold this, then it'll run back down, right? So this is where you notice the arches that go outside of the box. When it goes outside, it needs to touch a level, touches something like this, maybe, and then goes back into the box. That is also another arch. So if you're following the price movement, price goes and touches these levels, which allows you to know that it's there, right? So technically, you wouldn't really know how to use the box unless you have things that show you that the box is even there in the first place. So we'll get into the technicals in a second, but just on an idea and a understanding of how it should work, wherever price is currently is what you're following. So as long as you know where it came from, you can tell where it potentially could go. So it'll leave you in a trade that's always going to be 50-50. So if you're coming from this -50 level and it's claiming the 0, you know that if it holds this, it either needs to go up to the 50 or it needs to fall straight down to the 100, right? And that's because of where it came from. So if that makes sense, let's put the trade that we just took on the chart. And if you have any questions, feel free to interrupt me before I get too far. All right, so box wise, let's say we're looking at this chart right here, and it looks a little crazy, but there's areas, right, that look like this. This is an arch. This is an arch, right? So when we're talking about the box, the arches are going to be what shows us where the top of the box may be, right, from the top. And then the bottom arch, which exists here, may show us where the bottom of the box may be. So just for an estimate, we're going to just line up the top of the box here, and then the bottom of the box at these wicks, and then just bring this across. So now, like we said, in order to know that that box is even there, we need to see price respect it, right? It needs to respect it. So you can see the top of the box here, it breaks out, it retests, right? You can see it touches here as well, tries to run. And then the middle is also being respected, right? So that middle is being touched and then holding, and then here it's being used as a resistance. So this box is definitely there. So like we said, if we follow the movement of price, let's change this to a line chart really quick. You'll be able to see that price has already touched the middle and is currently already touched the top of the box. If it can't hold the top of the box, then it needs to fall, which means it would need to go down to the middle. If it can't hold the middle, then it needs to go back down to the bottom and arch, right? So if we follow the movement, you can see how it touches the middle, right? After even touching the bottom. Then you can see it's kind of stagnant at the moment. So it can do one of two things. It needs to hold this level, go back to the mid, and then keep running, or it needs to drop even further. So if we were to use this box now, like we said with the Fibonacci, take the top, take the bottom, that will put your Fibonacci extension levels on. So now you'll be able to see it's touching the 50 and it still needs to touch that negative 100. And those extension levels will allow you to know that if it falls out the box, how far does it need to fall before potentially turning around and going back into the box. And now that it's back in the box, it still needs to go to this 50, which is where it's at currently. And if it can hold this 50 area, then it should be on its way to the 100 and then the 150, right? So that was more the complicated going into making it simple. So hopefully with that understanding of that whole Fibonacci sequence and making the box will allow you to realize where to create the box for one, two, how to put your Fibonacci on, and with those extension levels, where you can expect if it falls out the box to be able to turn around and start heading back into the box, right? To make a bunch of those arches. So the box is only going to serve you in finding the direction of the day, right? That's not everything you need to just be involved in trade, but it will help you at least being on the right side of the trade more often. So majority of your attention should go towards the arches in order to make the box and follow that continuing direction, right? So does that make sense towards your question? Or is there something that may arise from that that we can go into? I can do a few more examples if you need as well. All right, cool. Yeah, I'll show you some examples then. This is also not really time frame based, right? So this works on any time frame. You would just have to adjust your eyeballs to it because they're all going to look very different. So let's go to higher time frame. So let's see. If I were to draw this again, just as a diagram, for the upside, you need a sharp move, right? And then for the downside, you also need a sharp move in order to identify where the top and the bottom Fibonacci is going to go, right? And that would create your box. So when we're looking for these sharp moves, most of the time they're pretty obvious on the chart, right? So there's areas like this. This is a pretty sharp move, right, in that direction. This is pretty good move. This is a very big drop as well. So these areas could all serve you very well in creating your top and bottom, right? And then helping you move forward with the box idea. But context is everything. So for example, let's say to erase all of that and give us a new chart. So if this is all the data that we have, then again, we just need to start mapping out arches, right? So your eyeballs should quickly go to the areas that get rejected and then the areas that also hold, right? If you can see those, then you can draw a guideline of the box. It doesn't have to be accurate first. You just need to slap something on the chart first, and then you'll be able to fix it, right? But the main points that you need to see is the middle and the top doing what they're supposed to do, and the bottom, of course, right? So the top is supposed to, reject and hold, whereas the middle is supposed to do the same thing. So when we look at this chart, the top of the box is rejecting, right? It does it multiple times. So it shows that that thing is technically there. And then you have the middle where it bounces. That's also showing that it is there, right? And then we only have one bounce from the bottom, but at least that shows you that it's there as well. So this box looks very accurate at the moment. So all you can take from this is the Fibonacci, top and bottom, based off of that data. And this should show you the levels that you would use. So now moving forward, we just need to follow this as if it was kind of like the snake game, right? So it would need to go wall to wall. So from here, it's outside of the box. It ran up to these levels here and it came back into the box. So potentially we can use this level. If we can't hold it, then we need to fall, right? So I'm going to play this a little bit more. Cool. You can see here, it ran above, retested it, which allowed it to hold and got back to this level. It rejected here once and potentially rejecting here twice. If it can't get above this level, then it's going to need to go lower, which would serve us well with the idea of the arches outside of that box. So if we do lose these levels here, then it usually likes to go deeper towards the bottom. Yeah, so you can see rejected both times, ran back to the box here, actually identified that it touched the top of the box, and then you can see it broke down and retested and then dropped lower to that middle line. And then from this midpoint, you can see the jump. And then the second time that it also pushed under the midpoint, there's another jump. Notice how I'm not mentioning anything about, order blocks, sell side liquidity, or nothing like that. This is just simply the box and the levels. So if we were to take away all the candles and just use the line chart, right, there's less data to take, it's just more level to level thinking. So if we played more of this chart here, based off of the box data, it gave us these very accurate levels. And now you can see how it touches the 50 pretty nicely. It goes up to the 150, claims it, retests it, tries to hold it, right? So a lot of accuracy here based off of being able to place that Fibonacci in the right way. Without that being placed correctly, those levels will not be there for you to actually use. So does that add some context to it? Gotcha. Uh, okay. So yeah, if you were to go and try this on your own, I think the major key points to take away is making sure that your levels are being identified. And what I mean by that is you need to see price, touch it, and react to it. If it doesn't react to it, then that means wherever your Fibonacci is placed is probably off. And if it's off, that's definitely going to affect the accuracy of your trades. So in order to keep that in the right manner, you need to make sure that the middle is being rejected or used as a support when necessary, as well as that top and bottom. As long as everything lines up, then the rest of the Fibonacci extension levels should also line up as well. Even in a market that looks like this, right? But yeah, if you guys don't have any questions moving forward, I think that's the best way we can talk about the box. But seeing the box being done in back testing on your own, like just erase a month worth of time. For example, if we went up here, take that monthly chart, right? Take that replay button, then just take away enough time, and then go back down to a smaller time frame. And then from there, just test yourself, based off of the chart. You have this top, you have this bottom. Take the box, top and bottom. Does the middle respect itself? Not really. It's kind of playing in the middle a lot. So we might need more context, or maybe that's not ready. Well, so it drops out the box. Like we said, we still need more context. Even if we were to use this as a Fibonacci, it would extend the levels, which should show. And you can see here, broke under and retested the 50. That's not terrible. Reached the negative 100 right now. So again, now we would erase that box, go ahead and make a new one. We have more sharp moves here. Check it out. The bottom of this, top of this, and the middle are all touching with wicks. So that doesn't look too bad. So we'll keep that. That looks like a good box. We'll take our Fibonacci, top and bottom. That shows that our 50 is also being touched there. So now this is really good to trade, right? Because now you can see this is respecting here. This is respecting this. This also lines up here. So it's kind of like a stencil. And when that stencil is lined up, then all you have to do is just play with the levels, right? So from here, we're just playing the arch. So we should be looking for buys at some given point if this arch works. And if we can't hold, then it will reject to the lower end. Also, the 1, 2, 3 idea works really well going into the Fibonacci extension levels. So 1, 2, 3 at the 50, that could have been a fire trade. You'll probably see another opportunity that looks similar as well. So again, Fibonacci extension levels, right? 1, 2. There could be a 3 that might go to the negative 100. Let's see. Cool. Negative 100. Let's say we actually take this as a buy opportunity if it holds. So it cannot technically break this area. So the better the buys, the better we'll be in this position. So you can see all this liquidity droppage. So again, we would have to use that box idea on smaller time frames to try to get a better entry, but eventually this thing definitely going up. You can see the 1, 2, 3 again. Another Fibonacci is made here. Stop moving so fast. And the box is made here as well. And then you can see the arches that are coming out of it. So you can see the top of the box is being touched multiple times. So if we do hold this area, then we have to blast off now. Yep, so there's the blast off. So you can see the arch idea. So when the market is going to give it to you that easy, then it will present that easy. A lot of the moves that happen like this was probably during some kind of news events, which that's why we always skip that garbage. But you can see when it does want to give it to you, you have the arches that come out and then a pretty nice jump. And then again, our 1, 2, 3 idea usually presents itself very often at the extension levels. Top and bottom. So you can see 1, 2, 3 down to that 50 area, pops off pretty nice. 1, 2, 3, almost to the 50, but didn't quite touch. Still technically ran, but eventually it did touch and then continued to run. So this is how you would back test yourself if you were to use this box idea moving forward and trying to test yourself. So again, take the monthly chart, erase like 3 months, and then just try to see where you'd be able to create those boxes for yourself, extend the Fibonacci, and then just take the trades and see just how many you lose and how many you win and what ratio you would potentially have with yourself. And I think that would build a lot of confidence in using the strategy. So does that bring any more questions to the board? Well, I'll leave that explanation there. I think we definitely beat up the box idea a little bit. So that's what I used today to help making that 2 bands real quick. So it wasn't too bad of an idea. You can see the trade is still kind of continuing into that 4 hour order block that we were targeting earlier right here. So we'll see what's good in the afternoon if we get some kind of trade potential. But there's a lot of news this Thursday. So this Thursday we got the Fed meeting and stuff. So right now, if we were to take this trading range that exists, right? There's a bottom here. And then if we take the top, push that here. Based off of Thursday being the driver of this news, which should be around this area right here, we might see the rest of the market try to stay, let's say, maybe draw these levels first, and then maybe draw these levels towards the low end here, and then eventually come back to the middle. So that way, when that news hits, all of this space is still open and this is open. So then it'll be able to use that as liquidity. So we know news, the candle likes to go pretty crazy. So sometimes it'll dip in for the low and then run all the way to the high, or it'll dip into the high and then run all the way to the low. So when it comes down to Thursday, we'll go over this again with more context, and we might be able to see what they're actually going for. So for now, I'll leave you guys with this. So if we don't have any more questions, and I'll see y'all tomorrow. All right, family. I'll see ya. Peace.